Jared Blikre has a closer look at the big board of some of the selling that we're seeing as a result of what we just heard from Powell.
That's right. Let's go through some of the market movements here. I think it's instructive to view what happened first and then what happened next. At 2 p.m., we got a bullish tilt to the markets, and that's based on expectations that the Fed might eventually, pare back the blistering pace of rate hikes. But Powell put a quick end to that early on in the presser. And you got to think that the Fed is actually doing its job here. The Fed doesn't want to see stocks higher on a day when it's contemplating or at least signaling that it might back off the rate of rate hikes here, and that's what we're getting. So the S&P 500 down 2%. I'm going to go through some other markets here. Volatility is up. You can see the VIX. The VIX is actually net down from that time period, and so that's pretty interesting. Going to make a note of that. 5-year T-note yield did drop on that announcement, and then it basically came back to the entry point, and then the 10-year T-note, it's actually higher based on the 2 p.m. print that we got. Finally, here's the 13-week T-bill rate that tracks closely what the Fed's short-term, the Fed funds market is doing right now. Now, the U.S. dollar index ended higher as well, so all of this is signaling that there might be some more risk aversion in the markets, although we're getting a conflicting picture here between yields and the dollar. I think we're going to see that sorted out over the next 24 hours. Also want to show you what's happening in Bitcoin, because this would be the supreme irony if Bitcoin actually led the way. Didn't fully participate to the upside, wasn't as up as much as some of the equities, and now it is given those back. So Bitcoin foretelling the future that maybe we have to wait a few more announcements before we're going to get that final pivot that everybody's been expecting. That would be some irony right there. Let me just close with some of the sector action and some heat maps that we're looking at. Everything in the red right now. I was talking about the hit that we were taking to yields. Normally that would benefit some of the mega caps, but not today. We're seeing consumer discretionary, tech, and also communication services down more than 2%. So again, it's probably too early to parse out what these movements quite mean. Going to take another day or so, but in the meantime, stocks are down. Maybe Chair Powell did his job.
I guess so. Even energy down 2.2%. Wow,
yeah.
Good stuff. Jared Blikre, appreciate that.